we're here. We're here and we're back. Alright, we're going to get started in a few. So go ahead and enjoy the music. Alright. Welcome, family. Welcome back to another edition of Melon Economic News. Alright, we're gonna go ahead and get it started. Alright, we're gonna recap with the story that we put about the open markets and what I was let you know what you see, how we're asleep and how some of us are getting ready to go to work. Because today is August 26, 2020, and let's go ahead and get started. We're gonna let you see how different markets are open and some are closed. Alright. So if you can see here. If you can look, you can see the New York exchange is closed. The Tokyo exchange is closed. Alright, but right now the London markets are open. Amsterdam is open. The Canadians along with us are knocked out, sleep right now. Or at least some of us are ready to go to work. And the Hong Kong exchange is open right now. Alright, that includes Shanghai. They get rid of not Shanghai, but Hong Kong is closed, and most of the markets in the Asian markets they've already had their trading day for the day, and now they're closed. All right. So this was brought to you by FXEmpire.com. All right. All right. So let's go ahead and get started with some market news. We get into some stocks. All right. Let's start with precious metal. Gold is down to 1,919. Is down 0.551%. to about $1,919.58 an ounce. Alright, Bitcoin is down negative $220.30 to about $11,283. Crude oil is up about $43 and 44.5. Alright, S&P 500 futures is up about 12.344. Alright, silver is down $26.37 an ounce. All right. All right. So we get to switch over to. Let's switch over. Let's get over to YahooFinance.com. All right, S&P futures, we already covered that. Is this moving right now? So it's moving to the upside about +1. The Dow futures is down negative 19 points. The Nasdaq futures is up about 18.75 points. The Russell's 2000 futures is up about 0.90%. No, 0.90. All right. All right, we're taking a look at some of the. We'll go back over look at some of the metals. Gold is now up about $1,926.20, so about a 3.10% to about plus 0.16%. Silver is up about 0.18 cents to a gain of 0.067% to about $26.45 an ounce. Alrighty. Let's go ahead and get into some news here. Alright, we're going to get into this news here. This is brought to you by FoxBusiness.com. Millions of job losses to coronavirus pandemic can take years to return. Alright. The IRS has forecast there will be about 229.3 million employees classified jobs in the U.S. in 2021, a drop of roughly 38.9 million in the previous year prior to the virus hit. The projection shows the data is an estimate of how many W-2 tax forms the agency expects to receive that year. All right. The Fed underscores support for the economy recovery through the virus concerns. The damage inflicted by the job market is expected to persist for years. The data shows with W-2 filings still nowhere close to their pre-pandemic levels, even in 2028. The IRS expects to see about a 255.5 million that year. All right, since the pandemic has triggered unprecedented shutdowns in the nation's economy in mid-March, about 57 million Americans have filed for unemployment benefits. All right, so think about it. If we're 300 and let's say 308 million people according to the last census, and you have 57 million Americans applying for 50 unemployment benefits. You can't sit up here and say that the unemployment number is 10.2%. All right, that is totally wrong. All right. Now down here, the unemployment rate is officially 10.2% after the economic added 1.8 million jobs last month, according to the Department of Labor in July's report. The report marked the third consecutive month of job growth in the millions. The economy has so far added back less than half, about 42% of the 22 million jobs lost during the pandemic. Now, once you think about it, just go back and read it. We'll go back up here, all right, and read. All right. Since the pandemic triggered an unprecedented shutdown in the nation's economy in mid-March, about 57 million Americans have filed for unemployment benefits. All right. And then we go down here. All right. The report marked in the third consecutive month of job growth in the millions. The economy has so far added back less than half, about 42% of the 22 million jobs lost during the pandemic. So they saying in the top part of the article that 50 million Americans have filed for unemployment. That means 57 million Americans unemployed. But then they turn around later on down here and they say that the nation has added back 1.8 million, according to July. Hey, listen to say what's going on to my wife. She just took off. All right, I want to get her in, but she didn't show up. All right. Less than half back, about 42% of the 22 million jobs lost in the pandemic. See, I told you, family, go read John Williams' Shadow Stats. We'll go over that one in a second. All right, look at the real numbers, the U3 and the U6. All right, one of them is the monthly, and then one of them is the other, what they put out for the month, and one of them put out the quarterly to annual. All right, we'll go over the U6, the U3 and the U6. All right. All right. Alright, so we're here at John Williams at ShadowStats.com. Alright, initial claims for unemployment insurance widened and unexpectedly widened. Department of Labor new claims for unemployment deteriorated unexpectedly for the week ended August 15th on top negative revisions to the prior week's details. Such was consistent with an unfolding L-shaped economic recovery, as discussed on the August 7th graphic below. Alright, we go down here. Alright. August 7th below. Severe quality and credibility issues continue to plague improving headline labor issues, the BLS, the Bureau of Labor and Statistics. Alright. What they did, they went back and revised the numbers again to show improvement. And then you get about around October time frame, late September, October, they're going to revise the numbers again. So they're going to give the red numbers revised down. Alright. This is how they do it. They give one number, saying that everything is good to go, and then next thing you know, a few months later, those numbers curve down. All right. So here's another article on the top side revisions. A statistically worthless 13.9% jump in July 2020 new home sales extended its recovery into a second month, while existing home sales surged 24.7% in the month, achieving initial recovery of its pre-pandemic levels. That was August 25th. The National Health, the NHS Census Bureau. August 21st, the EHS, National Association of Realtors. All right. In extent of unusual, extreme monthly gyrations and massive revisions. All right. And the July 2020 new home sales census monthly gain of 13.9% on top of any upwardly revised 38.8% gain off its April through was not statistically meaningful at the 90% confidence intervals. Although its 36.3% annual gain was enough to indicate that year-to-year change is likely was positive. Having recovered its pre-pandemic levels, the NHS still held shy by negative 31.5%. Not 31.5% negative. of every recovery is pre-Great Great Recession peak activity. July 2020 existing home sales jumped 24.7% in the month on the top of a 20.7% in July. In June gain off its May though, turning positive year to year in July by 8.7. So they gave the numbers for June and July, and then they went back and revised them. All right, in the previous article I had before this one. All right, this is how they do it. All right. We're going to switch over to another interesting topic, the LBMA and the COMEX, all right? The LBMA stands for London Bullion Metals Association, all right? And the COMEX stands for Chicago Mercantile Exchange Group, all right? No, that's the CME. Sorry about that. I gave bad information. I'm sorry about that. That's the CME. It's Chicago Mercantile Exchange Group, all right? And a move that has gone entirely unnoticed in the precious metals market, but which signals gold and silver bar delivery constraints for the COMEX, gold and futures contracts. Chicago Mercantile Exchange Group, or the CME, operator of the New York-based COMEX, has quietly and under the radar hugely expanded its list of eligible refinery gold and silver bar brands that can be delivered against the massively traded flagship, the CG 100, all right, or 100 ounces of gold and SI 5,000 of silver contracts. All right. These changes were implemented on July 27th, and which were detailed below, as they also took look to be served in an even bigger agenda, preparing for a radical change in delivery procedures of these two famous contracts, as to facilitate gold and silver stored in London. The London Bullion Market Association, or the LBMA, all right, votes in London, England, to be used in settlement against the GC 100 and the SI 5,000 ounce COMEX contracts. Note that the COMEX 100 gold ounce futures contract is currently deliverable as either one 100 troy ounce gold bar or three 1 kilo gold bars, while the COMEX 5,000 ounce silver futures contract is currently deliverable as 5 1,000 troy ounce cast silver bars with a weight tolerance of a 10% either higher or lower. To reiterate, these changes to the gold and silver refinery brands listed the big boy contracts, all right, the GC 100 and SI. You may also recall something similar happening to the new Ford GC contract, all right, when it was rushed out in late March, but it was just a trial run in this main event. All right. All right. So we got that one, and then we switch over to our last topic here, a quick one. All right. The Fed is going to unleash an inflationary storm. In the biggest news for the markets right now, concerns of the Fed and inflationary for the last 20 years. The Fed has argued that it's targeting an inflation of 2%. Okay, sure, you believe that. All right. Everyone knows that the real estate inflation is well above the level, but the Fed is the Fed. As the primary director of the financial system, the Fed target rate of inflation is used as a baseline for all major portfolio managers. All right. In simple terms, the Fed is broadcasting that it's going to unleash inflationary in a big way. All right, how big? The media is presenting Jerome Powell as an antithesis of former Fed chair Paul Volcker. Volcker is famous for stopping the runaway inflation in the late 1970s and early 80s, when interest rate rose to 19%. And Jerome Powell is being presented as the opposite of Volcker. This means Powell is signaling that he is perfectly happy to let the inflation genie out of the lamp. All right. This is going to unleash an inflationary storm that will send inflation hedges like gold and silver and the miners through the roof. All right. Indeed, gold has already exploded higher to over $2,000 per ounce. Imagine where it and other inflationary hedges will go by the time the Fed has really turned on the printing presses. All right. So that's it, family. We got some big news. All right. The LBMA and the COMEX are at it again. All right. We got the revised numbers. They continue to revise the numbers for going all the way back until April of this year. All right, so look for more revisions to come in. Look for the real numbers, the U3 and the U6 unemployment numbers. All right, we got financial markets in turmoil. All right, and the Fed is releasing all sorts of craziness onto the markets. All right. So once again, family, thank you for joining the edition of Melon Economic News. Please like and subscribe. All right, give constructive comments. That's always appreciated. How we can get it better. All right, please take care of each other. I'll see you around. Thanks, family. Let's get it started.